What are the charts telling us could be ahead? Joining me now is Katie Stockton. She is Fairlead Strategies founder and managing partner and a CNBC contributor. Katie, we just heard from Mike Santoli about how maybe things aren't that rough with the charts. What are they telling you directionally about what's doing well and maybe what's stalling out?
You know, this week has been somewhat tough for the charts in my work. We have now new intermediate term overbought downturns with the pullbacks that we've seen from the major indices. That includes the S&P 500, the NASDAQ 100, and therein also SPY QQQ. We have those ETFs testing their 50-day moving averages. There are some similarities between today and last Friday. They came down to their 50 days and pivoted, bounced up. But I think it might be premature to suggest that the pullback has ended because we have these new downturns in the weekly metrics. And the weekly metrics have implications for a few weeks as opposed to a few days like the daily metrics that we track.
Have you seen an impact in the charts from this tendency we've seen from retail investors to buy these dips even when the institutions are not? And, you know, the retail investor has been right, at least as far as the market is faring so far.
Yeah, I mean, so far so good, right? Up until now, the 20-day moving averages have mostly been pointing higher since that April low was established. And I do think that that's largely retail flows, it's passive flows. There's a lot of factors at work there. But again, we have a little bit of a chink in the armor of the market as of the last couple of weeks with volatility having increased. And of course, we now have a VIX that looks to be entering a higher volatility cycle. And when that happens, we tend to see more volatility, and that's been lacking really up until mid-October.
Well, let's look at the NVIDIA chart because that's going to be a huge impact, I imagine, on the markets next week, at least potentially. Well off the highs, but, you know, at this level, I don't know, it looks interesting to me, but I'm no chartist.
It is interesting, and actually I think it's better for NVIDIA to be coming into its earnings report next week short-term oversold as opposed to short-term overbought. But ideally, we see NVIDIA stabilize near some support on the chart. It's essentially around 180 to 190, so pretty close to in line. There is some support for NVIDIA. It's based on our daily cloud model. And with short-term oversold conditions there, it has a better chance of holding. But I would be taking a wait-and-see approach rather than adding exposure if I didn't already have it, because I want to see that reaction to earnings to see if it manages to continue to hold, given the loss of momentum that is certainly evident in those weekly indicators.
And NVIDIA tends not to, well, I guess by nature, lately sell off and stay off for long. If it does, are there things that tend to follow? What kind of influence does the stock have now?
Well, I think it's a huge, huge influence on market sentiment, especially in the retail camp. Folks are tying it to the AI trade. We have seen some of the high flyers within the AI trade pull back in a pretty notable way. So their pullbacks now reflect a loss of momentum that's carried over to those same intermediate term metrics. So if that happens or continues to happen with NVIDIA, it extends its corrective phase. I do think it will be an influence on anything that's tech related, really. So the tech sector as a whole. And when the S&P 500 loses the support of the tech sector, that of course becomes somewhat problematic. So we're going to take that wait and see approach until those indicators on the weekly charts look better. We wouldn't feel comfortable adding exposure. In fact, we've been recommending to our clients for a few weeks now to be partially hedged just to mitigate that risk.